Imagine waking up one day and knowing that the inflation rate of your country is almost doubled from what it was yesterday. This isn't any chronicle from a dystopian novel, but the harsh reality of Zimbabwe's inflation crisis. In this landlocked African nation, once known for its vibrant agricultural sector and hopeful spirit, streets now stand eerily quiet and supermarket shelves gape bare. Now, Zimbabwe officials say the country's annual inflation rate has more than doubled from May to June to a staggering 175% amidst this ongoing economic turmoil. But what went wrong? From Zimbabwe's promising agricultural past to its current struggles, here is everything you need to know about Zimbabwe's inflation crisis. But before we dig deep into it, make sure to like, share, and subscribe to the channel for more insightful content. The rise of inflation. Zimbabwe is a landlocked country located between Zambezia and Limpopo rivers and bordered by South Africa, Botswana, Zambia, and Mozambique. With roughly 16 million people, it is classified as a middle-income country with a low HDI score and a high income disparity. For decades, Zimbabwe was considered the breadbasket of Africa, with a thriving agricultural-based economy. However, in the early 2000s, disastrous economic policies and hyperinflation plunged the once prosperous country into crisis. In the late 90s and early 2000s, former President Robert Mugabe instituted a series of land reforms aimed at redistributing land from white commercial farmers to black Zimbabweans. While he intended to address historical imbalances, the implementation was chaotic and violent. Many farms were seized with little compensation. As a result, agriculture exports and domestic food production declined sharply. Consequently, Mugabe's government resorted to printing money to finance the land reforms and other government spending. As more money entered circulation, inflation began rising rapidly. By 2003, it reached over 600% and continued accelerating onward. The government failed to curb spending or tighten monetary policy, which fueled the hyperinflation even more. By 2005, inflation was in the triple digits, and the crisis was in full force as people struggled to find essential goods on supermarket shelves, which led to a raise in prices on a daily basis. Many people resorted to bartering interests instead of rapidly devaluing Zimbabwean dollars. The government continued printing more extensive denomination notes that were nearly worthless upon issuing. At the time, a $1,000 note might buy you a loaf of bread, but that was just the beginning. By 2007, inflation exploded, reaching over 11,000%. To counter hyperinflation, the government implemented price controls, outlawed inflation statistics, but they ignored the reality. By mid-2008, the situation deteriorated into utter chaos. Inflation nearly 100,000% per month, and the highest denomination was a $100 trillion note worth about 40 US cents. This turned daily life into a struggle for survival. Millions faced extreme poverty and malnutrition as rampant price rises outstripped wages and pensions. People would wake up at dawn to queue for food, fuel, and cash, hoping the supplies would last until they reached the front. Many transactions reverted to bartering goods. Formal employment collapsed as businesses could no longer pay livable wages. To access cash, Zimbabweans joined miles-long lines at increasingly ill-stocked ATMs. Cash limits fell to a few dollars amid acute paper shortages. In response, the government took the unusual step of directly printing additional zeros on banknotes. By late 2008, the government conceded defeat and abandoned the Zimbabwe dollar. Years of mismanaged money printing have destroyed the currency's value. In 2009, Zimbabwe officially dollarized, adopting the US dollar and other foreign currencies. This brought much-needed stability and helped rein in hyperinflation. However, the scars of the crisis remained deep. The economy was in tatters after years of contraction. Poverty was pervasive amid 90% unemployment. Basic infrastructure and public services had already collapsed, and the healthcare system was crippled by medication and salary shortages. With cash so scarce, Zimbabweans innovated new payment systems out of necessity. Mobile money platforms like EcoCash, launched in 2011, filled the gap. people could securely pay bills, send money, and shop remotely using phone credit as digital currency. EcoCash became a lifeline, handling over 90% of the nation's financial transactions by 2017 and restoring some economic function despite the continued political turmoil. However, in 2019, history began to repeat itself as inflation returned due to a loose monetary policy. The government unveiled the new Zimbabwean dollar, rapidly eroding its value against foreign currencies, and by 2020, inflation topped 800%. Fuel, foreign exchange, and cash shortages resurfaced as the economy once again struggled. The government blamed price gouging instead of addressing underlying fiscal and monetary imbalances. Mobile money provided hope that Zimbabwe could rebuild a stable foundation, leapfrogging the banks. However, lasting recovery requires change within dysfunctional governance and an economy too dependent on extracting raw commodities. The inflation crisis is a trauma that won't be forgotten so soon by millions who lived through the catastrophe. The lasting impacts. The persistent scars of Zimbabwe's inflation crisis actively affected communities nationwide. In the crowded neighborhoods of Mbare on the outskirts of Harare, an informal market known as an Oki began thriving as never before. Citizens formed long queues before dawn, desperate to secure the necessities steadily disappearing from supermarket shelves. As prices spiraled out of control on a near daily basis under the country's collapsing currency, traditional retailers could no longer meet the dire needs of the populace. Though operating outside the bounds of law and regulation, Oki's shadowy operations discovered an opportunity amid the crisis. By sourcing goods from abroad and accepting only US dollars as payment, they remained unburdened by the Zimbabwe dollar's erratic inflation. The establishment swiftly grew to dominate the neighborhood's flow of commodities. Additionally, vendors turned vehicles into roving markets, selling groceries outside upscale malls, which was emerged from Zimbabwe's currency instability and 15 years of economic gloom. In these fraught times, street merchants and informal bazaars emerged as a panacea. While supermarkets stuck to the Zimbabwe dollar, cryptically adjusting prices to match its precipitous fall, makeshift stalls like Oki procure goods smuggled from neighbors, pricing clandestinely in dollars. Economists cautioned that without intervention, the country's unstable currency exchange rates pose significant threats to official registered businesses. Companies struggled to remain viable as accepting payment in the declining Zimbabwean dollar exposed them to potential losses each week as rates unpredictably fluctuated. With no relief in sight, continuing operations under such unstable conditions placed formal enterprises at risk of failure. While the world witnessed the suffering of Zimbabwe's people, questions remained about who should be held accountable for causing the inflation crisis. The policy mismanagement and corruption. Zimbabwe's troubles began in the early 1990s when misguided economic policies led to disastrous outcomes. Land reforms damaged food production just as sanctions cut off finances. As the economy declined, the government printed money to fund imports and war, fueling rampant inflation. This tragic mistake was compounded by corruption, as elites profited while citizens suffered under 80% unemployment. Though the Reserve Bank tried in vain to control inflation through redenomination and people lost faith in their currency, the economy was in ruins by 2008 when inflation topped 79 million %. Governance weaknesses in Zimbabwe actively fostered rampant corruption within the government. This corruption exploited opportunities to waste public funds through inefficient spending actively. In its grim assessment in 2022, Transparency International ranked Zimbabwe extremely low at 157 out of 180 countries, based on perceived levels of corruption ravaging state institutions. The lower the ranking, the more corruption plagued the public sector. Moreover, it was revealed that corruption had actively plagued the government for over a decade without meaningful effort to curb it. Further confirming the dire situation, Afrobarometer's 2022 survey uncovered that 87% of Zimbabweans believed corruption had actively worsened or persistently damaged the country. The darkness of corruption continued clinging to Zimbabwe, actively undermining its prospects for stability and prosperity. A ray of hope. There were few signs that the troubles plaguing the nation would soon relent. However, a ray of hope remained. If meaningful reforms took hold, Zimbabwe's economy might overcome its difficulties and emerge stronger. Numerous challenges still threatened its prosperity, but prudent changes offered the potential for progress. Inflation, high interest rates, and a sliding currency have increased living costs, slower enterprise, and job losses. But these issues stem from more profound weaknesses that reform can remedy. Improving fiscal responsibility through a strengthened budgeting system would enhance revenue gathering and better allocation of state spending. Additionally, addressing informality prevalence could allow more funds to support citizens' welfare. Reforms instilling central bank independence, especially in its monetary rulings, are also vital to preserving price stability. With autonomy over its monetary authority and transparency within budgeting processes, Zimbabwe can attract business confidence and investment to spur growth. If this happens, jobs will follow as opportunities will increase. For years, shadowy forces have undermined Zimbabwe's economy through instability and corruption. Its people endure suffering while those responsible operate with impunity. Now, only decisive action can steer the nation from ruin, awakening its slumbering potential through justice. But where accountability is lost, oppression takes root, and thus Zimbabwe's fate hangs in the balance. Ending note. What do you think were some of the root causes that led Zimbabwe's inflation crisis? Share your thoughts in the comments below.